everyone. In today's episode, I'll discuss a potential Australian property market crash. Now, it's a very interesting topic because it's obviously been spoken about for so many years. You can obviously find every article in the world. I think Wikipedia's got about 10 different articles on the Australian property bubble and all that kind of thing. So what I'm going to get into today is, first of all, what a market crash is. Second of all, can the market crash? Third of all, I'm going to have a little bit of fun and just poke fun at the continuing experts' failed predictions, and that's been pretty consistent throughout time, so I can't wait to have a go at that. And then finally, what's in store for property prices coming into the future? Let's get into it. So let's first of all define what a market crash is, because I think a lot of people like to spruik the market without knowing what a market crash actually means. So let's first of all start with a correction. A correction is a 10% decline, a bear market is a 20% decline, and a crash is a 35 to 60% decline that generally happens very fast in nature. So it's generally over about a 6-month period or so. So that's what a market crash is. And for those people that have lived in Australia their whole life, and even people that have lived in Australia their whole life, pretty much, to know, even 100-year-old people would say that they've probably never seen a market crash in Australia. I certainly haven't. Definitely hasn't gone down 35 to 60%. But let's be straight, there actually has been a property market crash in Australia. And this is just started off Matusik, and it was actually from 1891 to about 1896. So that was following a asset and land boom, in terms of investment and land boom. And what basically happened in that was, first of all, the investment and land boom saw incredible growth. So you can see just in that graph alone, what happened there was property prices pretty much almost doubled in only a couple of years, from 86 to 91. But then what then happened was there was an oversupply of investment in land. Due to that being the case, and remember back then we didn't have the same sort of hyperinflation that we have today, in terms of we can just print more money, it's not backed by the gold standard or anything like that. Basically, people started to default, and then that led to a banking crisis because they couldn't actually collect the money they needed to. Therefore, they had an oversupply of people wanting to sell, and therefore prices fell dramatically because there was all these fire sales going out the door. Not only that too, but the late 1800s mining boom also softened a lot. There was a lot of shearer and agricultural strikes at the time, and then that led to a deep depression. So that's what caused the only market crash that's ever happened in Australia. And you can see there that the prices at that point in time dropped literally about 30 to 35%. So that does constitute roughly a crash. Not a deep one, but it definitely does constitute a crash. But that's a time it actually has crashed in Australia, for those that don't know. Now, not only that too, look, the US has had a market crash. So the '08 crisis is one of the crashes that did happen. So look, this is just a general US graph, and that looks like, I'd say roughly about a 20 to 25% turn. But look, some states in America did fall by about 35 to 40%, especially some cities. And the main reason for that really was an overextended subprime lending. So what really happened there was predatory subprime mortgage, non-recourse lending. So look, in Australia, we have something called full recourse lending, which basically means if you default on your loan, the actual lender can pursue your additional assets to pay back the loan's balance. So if you ever go to a lender, for example, and try to get a loan, often they'll ask, do you own a car? Do you own a boat? Do you own any other properties? And they'll try to get you to basically cross-secure it as a loan. But generally as well, what they will do is, especially if it's in your personal name and you default on it, they'll come after you to actually repay that loan so they don't lose any money. That's what happens in Australia. So that's full recourse lending. Whereas in America, they had something called non-recourse lending. And so for people who've ever watched a movie like The Big Short, you'll know the exact segment I'm talking about, where I think it's a couple of them go into a home and it's just basically an abandoned estate. there's a tenant inside, and they ask, does so-and-so, have they been paying their mortgage? And the tenant asked him, well, that's my landlord's dog's name, and is the mortgage in his name or something along the lines of that? And anyway, it was behind on his loan. So basically in the US, they had ridiculously predatory lending, and a lot of it was non-recourse lending. So basically what that means is the lender is the one who has to cover the entire debt and take control of the collateral in terms of the debt. So in Australia, it's on the individual basically to repay all the loan. In America, with non-recourse lending, it's on the bank. So what then happened there was basically all these people were insolvent. Not only that too, but then the banks had to obviously reclaim all these homes, and they didn't even have enough administration staff to actually process that. So they were just literally listing homes online, fire selling everything and taking whatever offer they could get, because that's what they had to do, because they didn't even simply have the admin staff to deal with it. So obviously I've gone into two of the actual market crashes that happened in the past, but these are real indicators of a market crash, particularly a property market crash, and it is pretty rare. But first of all, you have to have a supply and demand slump. So I mean, you have to have ridiculously more supply than there is existing demand. So look, as you can see, obviously in the Aussie crash in 1891, there was ridiculous oversupply in investment purchases in terms of land. That's why it obviously slumped. And in America, you had something which was obviously oversupply, but you also had overextended risky lending, which is very unlikely in Australia with the way our banks do it, but that's another thing that can cause it. And then not only that too, but failing in multiple industries. And when I say that, I mean key industries in particular. So both booms, you'll notice that there was a mining fall, and there was also an agricultural fall. In the Australian one, in America, there was a banking crisis fall. So that was one. There was also construction in America too. So look, all of that together obviously means multiple key industries failed. So that can cause a property market crash, but you kind of need all of them at the same time to happen. So that's the thing I'm going to get into. Now look, in Australia, a market crash is very unlikely. Now I'm not saying it's impossible, but in terms of unlikeliness, it's extremely unlikely. I mean, I'd give it probably a 1, maybe a 0.5% chance of happening. And at the moment, I'd give it literally, I mean, a 0.000 repeater to the number before infinity, then put a 1 in front of it, chance of happening. And there's a few reasons for that. I'll just get into it because I don't think a lot of people think about this. First of all, there's this extreme undersupply and excess demand. So that's number one, and that's number one that has to be in the wrong form of the equation for it to happen. Secondly, we have incredible population growth, probably to a lot of people's dismay, but I'll get into that too. We have very low loan to value ratios and also excess international demand. So in saying that, if we just look at our national vacancy rate, you'll see here that it's basically at like just over 1%. And look, in even markets, about 2.5% to 3% in my view and most people's views. So we're critically undersupplied at the moment, and it's just ridiculous. And that's simply because we don't have enough homes for the amount of people we have. It's a very simple equation, but the government obviously have done all their arts degrees and, been in the trade unions and never actually worked a proper job, so they can't add three numbers together. That's the reason they can't figure that out. And obviously the tall poppy syndrome as well. So look, supply and demand is a direct, basically representation of the amount of dwellings that we have and the amount of people that need a dwelling. It's such a simple equation. So it's a direct, should I say, policy failure of the government. And I'm not necessarily blaming Labor, Liberal, or either of them. They both have been pretty bad. I think Labor's been significantly worse, and I'll get into that for the next reason. That is because we have the highest population growth almost on record. And you'll see here, we had a time of COVID where we had the, I'd say, best potential time ever to catch up with construction and getting the homes we needed, because we had the lowest population growth in something like 30 years or something along the lines of that. But they decided to shut down the whole country and obviously let us do nothing. So we basically built no homes. And then they decided, let's bring in the most immigrants and most people we've ever brought in our life. Now, mind you, I'm from an immigrant background. I am half Australian English and half Vietnamese. I'm the son of a Vietnamese immigrant, okay? So I'm all for immigration, but you need to take care of your country and get things sorted before you bring people in, because it's not the immigrants' actual fault if you bring them in and, you know, they need a place to live. They of course need a place to live. But let's actually get our stuff sorted, then bring them in so that our existing people have the infrastructure. They then have the infrastructure as well to live at a high quality and high standard of living and then contribute to our country. Let's not turn Australia into a slum where you have a homelessness rate of 2.5 times the rate of the United States. So for those people that are backing all these idiotic greenie policies and crap like that, just think of that. If you want to continue to back those, accept that those policies have caused Australia to have a homelessness rate 2.5 times worse in terms of per capita than in the United States. So, look, not only that too, but we've got very low loan to value ratios. Look, a lot of people, around 30% or so of people in Australia own their homes outright. Now, in the better suburbs, that number's even higher. Now, this is just a actual Australian Finance Group article. And you can see here it's also been fact checked. So for those that think I'm lying, it's actually got your good fact checker there too. It's our actual LVR has dropped to its lowest on record. So that means people aren't in financial stress like the media likes to say. And again, remember, the media full of broke art students who got provisional passes and couldn't do a proper degree in uni. So that's the reason why they don't know what they're talking about. So whatever they say, the exact opposite is exactly what's going on. So just remember that. Not only that too, but we've got massive international demand. So look, on top of this, internationals are coming in. They're buying in our really top end suburbs. And I don't mean, when I say top end, I don't mean like your, Bankstown in Sydney. I don't mean your Kendron in Brisbane. I don't mean your Joondalup in Perth. I don't mean your, St Albans or Brunswick in Melbourne. I mean your Churax, your Bellevue Hills, your New Farms, your Mossman Parks. Those are the suburbs they're buying in. And what that's doing is that's creating a spillover effect into other suburbs. So then your buyers who can't buy in Bellevue Hill are spreading out into Kingsford. Your buyers who can't buy in a New Farm are going to Wilston. Your buyers who can't buy in Mossman Park are going into Trigg. That's what's happening. So that's only making it worse. And again, thank the government for this, but what we really should do is we should take care of our own first, because, funny enough, what they do actually benefits me more, but I actually don't think it's a good thing for our country, because it's so important to take care of your people first, because the more and more worse this gets, the more and more closer to civil unrest we get, and you can already see that within the media. And again, as I said, it benefits me more for them to continue doing this, but it's not the right thing to do, and I would prefer to make less money and Australia to actually do better in terms of taking care of its own people and getting our actual standard of living up, than it would be just bowing down to, these other foreign entities, China, and just being these soft, leaders that we don't need. Like, no one respects a soft leader. No one respects our leadership at the moment. No one respects many people in politics, to be honest, at the moment. We need some politicians with actually some guts that actually make some decisions. Some people like, for example, your Paul Keatings, your Bob Hawkes, your John Howards that, probably sit both close to the centre of the line, either left or right of the line. But, one of them brought in superannuation. Very unpopular decision at the time, but it's necessary. And you can see that with our overbearing, age pension pool. And also, like, even the GST, that was also brought in. Very unpopular, but we had to at the time. Not saying I'm not a fan of a lot of taxes. I think there should be a lot less taxes, in my opinion. But what we should do is just tariff the shit out of these other people that are from like foreign countries. And what we should do then is use those tariffs and take like incentives off Australian buys. So for example, tariff the crap out of them on bringing any company into Australia that is in food, for example. Then let's say use that money for the tariffs that you make from the tariffs to give it to the farmers to take off the cost of their goods. So all the produce in Australia, for example, is cheaper and it's better than everything overseas. Therefore, everyone will buy Australian goods and they won't buy overseas goods. More money kept in Australia, less money going to overseas. Better overall economy, better functioning economy as well. So that's something they could do, and let's just hope for some politicians with some guts into the future. Let's get into one of my favourite sections. I've been waiting to do this pretty much the whole week, and it's the failed predictions of the so-called experts in the market. Probably the best section because I just laugh every time I see this, because whenever they come out with a new prediction, I just think, oh man, this must be the best time to buy because this guy has no idea what he's talking about. So there's actual 4 lots of them that I'm going to get into. And first of all, you have the dot-com bubble. You'll then also have the GFC crash. Then you also have the COVID-19 crash or COVID 2020 crash. And then also today's impending crashes that the media experts happen to say as well. Let's start with the dot-com crash, or the crash in 2001. So we had a thing in 2001 that was called the dot-com bubble, where everyone was scared of that. And there was a guy called Harry Dent who came out to Australia, and this guy's got the best track record I've ever seen of any economist. He's been wrong 379 times out of 379. Actually, he might have been right once, but even a broken clock tells the time right twice a day. So well done for guessing that, mate. But anyway, he also then thought in 2001 that due to the 9/11 attacks on the Twin Towers, which was awful, that uncertainty in the market create a market crash in Australia. So from memory, he said it would crash more than 30%. In some cases, he even said up to 50%. And let's just look what happened. So you'll see in 1996 here the prices, and then you'll see in 2008. So good old Harry Dent did him a great service of that. You can see all cities in Australia pretty much more than doubled in that period. Well done. And I think what he usually does is he comes out, he'll say, the market's going to crash, oh my God, there's going to be bloodbath on the streets, everyone's going to be living in tents and stuff like that. And then he goes, buy my book. And then what happens is 10 years later, he comes back out again. All these people say you're wrong, and he'll say, you just wait. And then the market doubles again, and he tells them to wait again. So in that time, the market would have quadrupled, and he's still waiting for his 50% crash. So whenever he says the market's going to crash, just remember he's probably picked the bottom of the market. Perfect time to buy. So you can, if you want to buy his book, just buy it and have it as a comedy session, because it'd be a good time and a good laugh for everyone that knows what they're talking about. But just consider that whenever he says something, just do the complete opposite, and you're probably going to make a lot of money. Another one, Stephen Keane loses housing bet against Rory Robertson. This again is in 2009. So he put a bet on it. He said the market would crash 40%. This is an economist. And he lost a bet that he had to walk up Mount Kosciuszko from memory. And what basically happened here was he said the market would crash 40% because of obviously the mortgage crisis was over in America. What he didn't realize was obviously we have full recourse lending, and we're not like America where you can get a loan and buy a house in your dog's name like on The Big Short. So in saying that, obviously we had a little bit of a correction. We had about an 8 to 10% correction or so in a lot of markets, which is okay. That can happen. But then what happened was after it, we had a very big boom, particularly in Sydney and Melbourne. You can see there alone, it went from this is just capital cities alone, right up to 2017 if you really want to look at it. Prices pretty much doubled in Sydney and Melbourne, which is just crazy. Melbourne particularly, from 2014 especially to 2017 did very well. But in just the preceding years after 2009, you can see immediate growth. He helped a lot of people out who listened to him. And look, I don't mean to kill all these guys that don't, know what they're talking about and like to spruik the media, but it's such the wrong thing to do, and really it's misleading, really. If you're in a position of power, just get it right. You shouldn't have a job if you can't get it right, seriously. Anyway, on to the COVID predictions. CBA warns a 32% house price correction and prolonged downturn. 1.5 billion in coronavirus hit to the bank. Now, this was in May 2020. What happened in 2021? From memory, I think we had the biggest boom on record. It was for like 30 years or something like that. I think it was even before I was born, which is insane. Went back to the data and I was just almost shaking my head saying 32% decrease, and I think the market did 25%. So what? They were 57% wrong? Like, how do you have a job and you're 57% wrong? Like, I have a mate who's a tradie, and if he runs a like electrical business, and if someone can't wire something properly and they're on their probation period, they just get the sack. How do these guys not get the sack? They're 57% wrong. Like, what the hell? How can you be that wrong? It just doesn't make sense. But anyway, again, they do what they do. And yeah, look here. So you can see kind of mid 2020 around that May prediction. That's where the market was. Then let's have a look what we've had about 4 or so years, and it looks like these are in brackets of about 100,000. So what we've had, that's about a 35 to 40% rise, and that's Australia wide. So even Melbourne actually grew since then, and Melbourne's been the worst performer, despite me obviously being very bullish on it right now. And yeah, that's what's happened. So crazy. Don't know how you can be so wrong, but again, the economists and media outlets like the negative news because it sells headlines. But yeah, they're very good at predicting things, as you can see. Now, what's happening in today's market? Now, I'm not having a go at this journalist because she's just obviously referencing obviously economists and other people's predictions. So she has plenty of articles. So some of them are very interesting. So I'd recommend a lot of them. A lot of you guys actually read it. They're both sides aligned, whether they think it's a fall or a rise. But it's always important, obviously, to see both sides of it. But basically, in this article, for those that are subscribed to the Sydney Morning Herald, you'll realise that there's a few economists also saying that we're going to have a double-dip downturn in Sydney. The market's going to fall by 10 to 30%, depending on which one you think of. And I'm telling you, that's not going to happen. But anyway, that goes on. But what really bothers me, and obviously I get fired up about this, and I use it as comedy session every day, is it's not more so about me having a laugh or anything like that, but it's actually people in Australia generally actually like to listen to the media. Anything with the legacy media, it's just centered around give me attention. I want views online. I want, some Instagram followers or something like that. Me personally, I could not give a shit about that. The reason I do stuff like this is because I want to inform people of what actually works and what doesn't. So don't listen to these idiotic economists and stuff like that who aren't even investors themselves. They don't even know what they're talking about. And the worst thing is, a lot of the people who actually think they know what they're talking about, then they sell the most, valuable asset they'll ever own in their life. Then they realize 5 years later that it was a good asset, then they can never buy back into it. So don't listen to these guys. Really, if you're one of those people that does get very emotional in headlines, you need to call someone like me or someone else that actually is in the market, who actually knows this kind of stuff. And I'll tell you exactly what happens, and I'll actually prove it to you with proven data, proven fundamentals and everything like that. Because what you need to realize is don't just believe whatever you're told. You need to question everything and ask, why are they saying this? Do they just want views? Do they actually own a property? Are they just an art student who couldn't do a proper degree in uni? Or were they a part of a trade union or something that has never worked a proper job? Because that's what most of these people are. They don't know anything. They've never taken a risk and run their own business. So they don't actually follow market cycles. They just want to work their cushy office job, wake up, at fucking 8:30, go to the office at 10, have breakfast for half an hour, go to lunch for 2 hours, come back, say to all their junior staff, "I'll do this for me, do that for me," then, spruik the market. And you see it all the time. You see it on the media, them asking, what do you think is going to happen in the market? And I'll tell you, a monkey could tell you as good of an answer as most of them. They'll say, the supply's here, the market's a bit softer in this side of them, in, let's say, Brisbane and Adelaide and Perth, they'll do the best the next year. Yeah, sure. Well, what else do you know about the market? Do you know any detail, or is it all just general? What they do is they'll give you general answers, but nothing specific. And it's because they don't know what they're talking about. I'd love someone like me or someone like some of the other guys who actually know what they're talking about to actually give an interview with them and actually grill them, or maybe not grill them, that's probably a bit harsh, but actually ask them some detailed questions and let's see if they actually genuinely know what they're talking about. Because I tell you right now, my bet is I reckon 1 in about 20 know what they're talking about. The others are just the face of the camera. They don't actually know what they're talking about because they're not real and genuine investors in the market. They haven't had to do things from a hard place. they, aren't like the genuine everyday Australian. So just don't listen to these everyday predictions, especially if it's from someone who's not invested, and especially from broke art students in the media. Just follow those words of advice from me. Probably to everyone's biggest question after I obviously went on a tirade about how crap our government is and also how bad the predictions are from the media is what's in store for property prices. Now, probably everyone can understand where I'm coming at from here, that it's actually probably going to continue to grow in the future. Now, look, again, I'm a big advocate, obviously, of people taking risk and people, bettering themselves. That's definitely something, and especially through property. And I'm not someone with tall poppy syndrome at all. I'm very pro people taking care of themselves, working very hard to get ahead in life. I'm very pro that. You'll never see me put someone down for doing very well in life unless they're doing it by obviously misleading the public like the media outlets. That's the only time I will not like it, or you're not acting the best face for the people. That's the politicians. But in general, look, we have very poor policy and very poor decisions, and it's actually going to force prices up further. And the reason for that is because, again, as I said, poor policy, and we just have a ridiculous undersupply of houses. Now, I think this is a very bad thing for the country because it's actually creating even more wealth divide, and I'll make a lot more money out of poor policy decision, but I actually don't want that to happen again, like I said earlier, because it's not good for our country. But these are the things I'm going to get into here. First of all, there's going to be continued growth until supply and demand is sorted. There's going to be continued government support for housing. And I don't mean support in a good way. I mean in a bad way. There's a good way and there's a bad way to do that. Third of all, there's going to be more immigration under the present government. Also, there'll be not enough support for the trade industry, and that will cause years of growth ahead. So, look, this is just a graph out of a scholarly article that I went to see. And you'll see here, this is basically supply and demand. You can see that obviously in COVID, we had, this is a projected, but it didn't actually happen because they always over project. That's what basically happens. But you can see here alone, what's kind of happening here is you can see we're in 2024 and there's already, they can show an undersupply there. And that's not even caught up to 2025. So that's really not going to happen until at least 26, 27. And it might not even happen depending on what our government actually does in terms of, making good policy decisions, actually backing some more supply to come into the market, helping the actual tradesmen out. But just alone on this graph, and this is granted with what they think they're going to do, and already I know they're well behind on their 1.2 million homes in 5 years, which they're never going to hit anyway, but people believe what they're told, which is unbelievable. But, if you take that actually out and what they'll actually do, that's probably a 2027, maybe even supply and demand balance. So, unfortunately, that's just the truth behind it. And then, to add to that, we've got continued support for housing. Now, I like to call out two things. So, look, there's two ways to go about it. One, I call it the carrot, and the other, I call it the stick. And a lot of people know what I'm talking about. So you can dangle the carrot in front of people, or you can dangle the stick in front of people. So, look, this isn't necessarily bad. This is just an extra subsidy for rent assistance. But I'm not necessarily a major fan of a rent subsidy because once you give it to people, they will almost never want you to take it away from them. That's the issue. So there's a book called The Toxic Chariot, and I recommend a lot of people read it. And basically, there's 5 stages of entitlement in that book. And basically, to give you a quick summary, what it basically says is once you give people something and they eventually become dependent on it, you become their enemy once you take it away from them. And that's what's going to happen here. So the thing I'm saying is here, it's not necessarily they don't need to give a subsidy. I do understand why they're doing it, but it's not that they shouldn't be giving it. I'll tell you why they shouldn't be giving it. It's simply because if the government knew what they did in the first place, there would be no need for a rental subsidy at all. So there'll be no need to spend extra tax on a rental subsidy because of their own fuck up. That's the truth. There should be none because the government shouldn't have let it get that bad to this situation. It's as simple as that. So what they should have done is incentivize people to create more stock, which meant because there was an even supply and demand, rent wouldn't go up by as far, and therefore more people wouldn't need the subsidy. Therefore, we had more tax dollars to spend on education, more to spend on healthcare, more to spend on infrastructure, more to spend on defence, things like that. But they didn't do that, and they let it continue to go bad. So that's the reason we have things like that. So it's their stuff up, and this is taxpayer money that they're using to do this with. So, as I said, this is dangling the carrot now, but they should have dangled the carrot in the first place so they didn't have to then dangle the stick. Because I'll tell you right now, I know a lot of landlords, and they're perfectly good people. I'd say 99% of the people I know are not your slum landlords. They genuinely talk to the tenants. They're happy to, or property managers, they're happy to help fix a house and stuff like that. But the fact of the matter is, when you put your property out for rent, right, and you have 92 people coming through in 5 days or something like that, or applying in 5 days, because I know someone who had that, and you've got, let's say, 10 perfectly good tenants, all have a really dire situation, similar dire situation. One wants to pay you $500 a week, the other wants to pay you $580, and they've all got terrible situations. Who are you going to rent your property to? Seriously, it's not actually the landlord's fault in doing this. If there was an even supply and demand, there wouldn't be 92 applicants. There might be 10, and they might have an offer of $490. They might have one of $510, and the rental market won't go up by 16% in a year like it did in some areas over the course of some of the COVID years. So that's what they need to do in terms of housing. Furthermore, Labor is one of the worst party. Labor and the Greens, they just think we can all live in this, fairyland where everyone's equal. We can all play and run around in the park, and that's just the way it's going to be. But the fact of the matter is, it's just not the way the world works. Look, I can be told by my mum, I can be told by someone that you can be LeBron James. And I'd hate to tell you, but your mum lied to you. You can't be LeBron James. You're not born 6'8", fit, athletic, and 125 kilos. I think 5'10" and about 80 kilos. You'd demolish me. It's just not a fact of the matter. So look, if they want to believe in that utopia, they can. But I think what I like to say about a lot of these parties is, don't watch what they say, watch what they do. And that's the way I kind of am in life. I don't watch what people say, I watch what they do. Because they said they would bring down migration numbers, but then we've had 659 increase in population. I think more than 500,000 arrivals in 1 year. That's basically adding nearly a Gold Coast to Australia every single year, and no one presses them about this. And it's obviously because all the media is completely, aside from probably SBS, left-wing bias. It's just a joke, seriously. They need to press them on this because, we don't even have enough homes for the people that live here, but then we're bringing in more people. And obviously, I think the average household size in Australia is like 2.1 or 2.2. So if you do that over 659,000, what does that end out to be? We need 270,000 dwellings, and we're already short. And we're already short of our actual target as well. So that's just adding more supply. And it's just unbelievable, seriously. How these people even get a single vote, I don't know. It just doesn't make sense to me. I care more about my fellow Australian people than just pleasing, the screaming minority. And we need to think like that, because this is just ruining the country. And that's what, as I said, supply and demand and prices prices are a direct result of undersupply and over demand, right? That's why prices go up, and that's why when supply stays low and you've got excess demand, this is just adding more demand and fuel to the fire. So, for people that, you might not agree with all of my views, and that's okay. Look, I'm open. I'm a firm believer in free speech, and I welcome anyone who disagrees with me to comment below and tell me why you disagree in a obviously respectful and logical way. That's what I'd say. But really, I don't know anyone in the world who would say this is a good idea unless you fully back construction and you back the people of Australia to get it under wraps. But this is what they do. Then they disincentivize the trade industry. So they like to further tax the heavy vehicles. Now, for people that do not know, and I have heaps of tradie friends, a lot of my cousins are friends. I'm from a farming background as well. So look, heavy vehicles like farm machinery, things that transport trade goods, trade vehicles, they all get this extra tax, which is basically your heavy vehicle tax. Now, for me, don't get me wrong, I understand, I love the environment. I surf a couple of times a week. I spearfish. I love going out in nature. I'm from quite a coastal family as well. And look, I love taking care of the environment. It's a good thing, but really, first of all, you've got to, with a lot of this green power, you first of all got to produce it, which originally will first of all come from heavy diesel plants. It'll come from burning coal to actually create the electricity, to actually bend, should I say, the wind turbines, create them in shape and all that kind of thing. Then you've obviously got to have a vehicle as well to take it out, install it, and then if it fails, like I know one in Portland did recently, then you've got to replace it with, again, heavy machinery. So you've got to consider, obviously, all the, should I say, goods and actual, should I say, fossil fuels and everything that goes to actually just getting there in the first place. Then also the maintenance and the cost effectiveness of it too. So look, if for inner city people that only have to drive, a year, maybe they might drive, the furthest they'll drive is 200 Ks in one hit in a year. Yeah, it makes sense to get an electric vehicle, right? But does it really make sense to try to tax the hardworking Australians like this guy in the photo just simply for doing the work that no one else wants to do, none of the hard work that no one else wants to do, that actually gets our country moving, feeds our people, puts the houses and roofs over people's heads? We should be incentivizing these people, seriously. Why don't we do this? Why don't we tariff the shit and take all our ports back, right? And then what we do is we tariff the overseas companies that sell us anything back, take all our ports back, sell them stuff overseas, then also create a sovereign wealth fund like Norway has, keep money in that in case of any emergency for every Australian person. But no, we don't do that. We tax the hardworking Australians who would help solve this crisis. So again, for all the greenies and all that kind of thing out there, again, if you wanna like comment and you disagree with me, do below. But tell me how mass migration and then doing stuff like this, which backs for more of the housing industry in the long term, because that's the vehicles they use, how is that going to help solve the crisis? It's not. Like, I'm not saying that I don't agree with taking care of the environment or anything like that, but I'm saying we really need to think about how to help the actual hardworking Australians here. That's what we need to do. And what the present government and actually most recent governments have done does not back that at all. Look, really, the final question that everyone will ask me is, what's really going to happen in the future with the Australian house prices? Now, all of what I've just said backs my statement I'm about to make, and that's that we have years of growth ahead. And I'm not necessarily saying that about every market. There are markets that are softer than others. There are markets that are obviously stronger than others. But what you're going to see is a couple of years of growth. I estimate probably 2 to 3, something like that, maybe more. But that undersupply and of the market and excess demand is just that you cannot have. That is, again, as I said earlier in the video, that's the first thing you need for prices to correct themselves. You need it the opposite way, but very hard. Then you also need bad lending, usually, and you also need key industries to fail. And that's not, that the key industries are a bit weak, but our supply and demand is so far away from a crash or any correction in the future that we're going to have years of growth ahead. So in this actual segment here, I've actually just taken a screenshot of the Aussie Home Loans 25-year report, and here's your extrapolated median house values by 2043 per city. Now, I don't agree with this entirely. Sydney and Melbourne will be a bit lower because what they'll do is they'll start to integrate further exurbs or outskirts of Sydney. So I know Sydney alone now includes right up to Doyleson, and I think Norah Head, most of the Central Coast is a part of Sydney and the Blue Mountains. Melbourne already includes right out to basically like Frankston, Cranbourne, and also even Melton now too. So that's going to make the price go down. But that price will be right for the genuine inner 30K ring of Melbourne and Sydney, I can guarantee you. I think Brisbane will probably do a little bit better than that. Perth maybe a little bit better, I think too. Again, it probably depends on where they include in terms of the CBD. If Brisbane wants to include right down to Coomera, then it's obviously going to be low. And if they want to include Caboolture and even a bit further north towards, the bottom end of the sunny coast will be lower too. Same as Perth. If they want to start including, Two Rocks right up towards, I think they do include Two Rocks from memory, but if they want to include right up towards Lancelin and even further past Mandurah towards, Bustleton, that'll also lower the price too. So it probably depends on that. But look, we've got years of growth ahead, and let's just be real here. Property prices are definitely going up. Obviously, it's going to be a good time for investors, and I do recommend people to work very hard and get into the market. But let's hope there's a bit of better policy, because I'm hopeful that hopefully we can get some governments with some guts, because I think there's going to be quite a revolt because of this. And I really actually want everyone to be living well. I don't think, like, obviously there's going to be always going to be richer people and poorer people, but if the overall economy can be good and we can have a strong middle class in Australia, which is what we're founded upon, I think it'd be a very good thing for the country. And let's back the people of our country. There's nothing wrong, for example, with someone investing in property and setting up their future. That puts less burden on our future pension funds and future needs for social welfare. So that money can be spent on our future children. That money can be spent on, even for the people who are quite green. Money can be spent on, let's say, like a hydro system. Money could also be spent on future infrastructure to maintain our waterways in times of floods or something like that. That money could be spent on, further improving our infrastructure and urban sprawl, making future city centres or something like that. So look, let's just hope for that. What I say to people is, don't have tall poppy syndrome. Support people who want to get ahead in life, because it's so important for the future of our country, because these are the people that are going to be obviously paying the taxes and backing the future of our country. Now, the thing a lot of people talk about is negative gearing, and I'll tell you right now, if people negative gearing, the average person pays, it's around 30 to 33% tax in Australia. So if you're negative gearing, you got to remember, you only get your taxable percentage back of the actual amount you gear. So in saying that, what that means is 2/3 or around 66 to 70% of people actually forking out money to pay for housing. So if the government is giving like $1 billion negative gearing benefits to people, that means people are forking out $2 billion to the housing market, which is helping the government not pay that $2 billion. So for people that don't understand that, ask yourself where that extra, should I say, $2 billion, it's not $2 billion, it's more than that. I was just giving a hypothetical example, but double whatever benefit that they're giving and think of where the government's going to take that from. If you want more potholes in your road, you're going to get more if you don't want to back this policy, because the government cannot afford to do that. I'm telling you that right now. And people that don't understand how it works will not know that. So do I think house prices should be as high as they are? No, I don't think that at all. Do I want people to go homeless? Not at all. But we need to incentivize supply and demand. That'll get it under control. Incentivize people to invest in their future, and then therefore we'll have more money because we'll create more revenue, and that will create more ability for the government to actually help people out. So that's what we need to do. But as I said, there's years of growth ahead in the housing market. Thanks so much for watching. Please subscribe to the channel, and if you're looking for a buyer's agent in Australia's best performing suburbs, be sure to reach out via www.compoundinvest.com.au. Thanks again, and welcome to the channel. I'll see you on the next one.